Hello, this is Mi-Yoon Woo from Weekju City University. Today is June 3rd, and we are starting the Weekju City News. Today as well, Mi-Yoon Woo is here to deliver the latest updates on the United States stock market without any changes. Today is a day with a big event in Korea. So today, even if I broadcast, I don't think many people will be watching. It's because today is an important day in Korea. So I hesitated about whether I should do the broadcast today, but I thought there might still be some people waiting, so I decided to go ahead and broadcast today as well. I've been living abroad for over 20 years now. I always have a lot of longing for my home country. So even though you may already know, my daughter's name is Seoul. That's how much I miss my home country. Recently, the news coming from Korea has been very negative, and there has been a lot of sad and upsetting news. So, as this election is starting, I'm looking forward to seeing a slightly more developed image of my home country. Now, let's get started right away with today's Bing 2 news, recorded on June 3rd. Today as well, I'll try to organize the situation as briefly as possible. Let's take a look at the S&P 500 chart. On one side, the decline has slowed down, while on the other side, there are signs of a rebound. Han Madiro was on the show earlier. Examining closely, you can see the Taigyoju are becoming somewhat more conservative. So overall, tech stocks and energy stocks performed well, and energy and tech sectors led the market. That's how you can see it. Except for some sectors like Tesla and Meta platforms, overall, green wasn't that prominent. Broadcom was strong. Except for some of these stocks, there weren't any big surges or big drops. Overall, the market was stable, and that's how it looked. If you look at the actual performance of the three major indexes yesterday, the Dow Jones was up 0.08%. That's the report I received. The S&P 500 was up plus 0.41%, and the Nasdaq rose 0.67%, performing the best. The positive part is that despite the recent market correction, the minus range was very small, and then it turned upward and ended up in the plus, which is quite positive. This shows that a rebound like this is possible. Because the market was also weak yesterday, the overall atmosphere in the market is still quite cautious. Around 70% of S&P 500 stocks are in the top 500 companies. Currently, momentum is forming in the short term, and that's how you should look at it. Since the long-term trend is at 48%, the overall trend is positive, and the negative side is not completely falling out of the downward trend yet. Next, let's take a look at the investor index. There is a bar at June 19th. The index is forming a lower pattern than the 200-day moving average, with the fear index staying below 20. Recently, it shows a tendency to remain quite low. The market is very stable and in a normal state. That's what you can see from this. The Korea Composite Stock Price Index has fallen to 54. In the Handong-an short-term bond market, the supply of public offering short-term bonds has decreased to the mid-range, resulting in a stable market state. The sentiment is calming down, it's staying in the mid-range, and that's how it can be interpreted. The max score provided by Choice Rank is not as intuitive as the Fear and Greed Index. It's still in the fear zone. Next is the chart. Yesterday, many stocks went up, but among them, Bistro performed the best, rising by 4.3%. Meta, Advanced Micro Devices, and Credo Technology rose by 3.62%, 3.52%, and 2.77% respectively. If you look at the day before that, Sun Moon Jisoo showed a sharp rise of over 13%. Also, Technology has just announced its earnings results, and we will deliver detailed information about the earnings results as soon as possible. Following that, Broadcom plus 2.74, Nvidia plus 1.89, Advanced Micro Devices plus 1.67, Celestica plus 1.09, MicroStrategy plus 0.87, Amazon plus 0.80, Taiwan Semiconductor Manufacturing Company plus 0.79, Palantir plus 0.20. The rest of the stocks fell behind, and yesterday, B2 dropped by 0.25%. Bitcoin also fell to 105,320. Trade Desk fell 0.60%, Uber dropped 0.62%, Tesla decreased 1.09%, Alphabet declined 1.58%, and Nextracker performed worst, falling 2.47%. The first article prepared for today is about the United States stock market. I also have a slightly cautious outlook compared to my previous prediction. Until recently, the United States stock market has not been able to recover its upward momentum. So when the price is formed below the previous high like this, usually the range of the United States stock market becomes very wide and you see a lot of volatility like this. That's why it's the same in the current situation. Some experts are saying that the rally we are seeing right now is a bear market rally and that eventually we will test the previous low again. Such negative views are constantly being raised. On the other hand, optimistic experts like Tony, whom I introduced before, are watching for a rebound right now. They say that if the economy turns around politically, there is a high possibility that this rally could strengthen again. So we are seeing sharply divided opinions like this. Today, the first thing we're going to look at together is the outlook of the optimists. Is there a technical indicator right now? This is contrary news that presents a decisive reason why the rally in the United States stock market could continue. Let me read you which indicator it is. It's an old saying that comes up every May. There is a strong belief that the stock market will continue to rise this summer as well, without any hesitation. The technical strategist of LPL Financial, Adam Turnquist, is coming out. He says that the overall market's rebound is a clear sign of a steady upward trend. This is different from the small-scale rallies of 2022, and he is confident about this. Even in 2022, the main stocks kept rising and falling, preventing a sustained upward trend. But this time, it's different. What is the representative indicator for that? The main indicator, he pointed out, is the S&P 500's upward and downward trends. In English, it's called the advanced decline line. This indicator shows how many stocks are participating in the rise of the main stocks. And what about this indicator? In the middle of April, it fell to its lowest level since January, but in May it recovered again to the highest level ever. This is a positive sign. This was said to be the most important test point among several signals, especially among technical signals. The reason is that if many categories do not rise together, it can be interpreted as the market's rebound not being sustainable. That's why we're saying that this rally may not last long. For that to occur, it's not sufficient for only a few sectors to rise. The entire market must increase collectively. That's why we stress this point. And recently, there have been a lot of stocks participating in the upward trend. The market often corrects and retests the low after a rally, a common pattern in a weak market. Caution is advised. This phenomenon reveals that, despite appearing like a rally in a weak market, the patterns differ significantly, indicating the market is rising in a fundamentally distinct manner. Commodity investors are still unable to shake off their caution, as the details of the Trump administration's policies remain unclear, and there are lingering concerns about the overall impact on the United States economy. Given the current external news, the situation appears concerning. As a result, many people are worried that stock prices could continue to decline. However, Tonkis is still showing a more cautious stance from a technical perspective. Don't be swayed by external news as the technical signals are too strong right now. That's why I'm telling you this. Tonkis analyzes the market trends in his own way, and when he looks at the upward trend of the market index, like the S&P 500, he actually checks which individual sectors are supporting that upward movement. And the lower this ratio is, the more the market's rise is not led by a few large cap stocks, but rather by the broad participation of various stocks. That's how you can interpret it. And according to Tonkis' calculations recently, the ratio of stocks contributing to the upward trend in the S&P 500 has dropped sharply to about 60%. This is being compared to February 19th, and the reason is that February 19th was the day when the S&P 500 hit its all-time high. So, the market breadth is better now than it was back then. On the other hand, on April 8th, when it had dropped by up to 30%, this figure fell sharply in a short period of time, as you can see here. Hey, stay with me here. On April 8th, 2025, the market's width dropped to 29.4, but previously, that figure had been over 60. Yonhap News reports that the information technology sector, which had been leading the market, is now showing signs of a reversal in April. Even at the end of May, the rate of increase in this sector did not reach 10%. However, recently this rate has soared to as high as 88%. So, if you look only at technology stocks, you could say that currently, about 90% of tech stocks are receiving upward momentum. If the information technology sector's share in the S&P 500 exceeds 30%, it could become a concern. Such changes are strongly supporting the overall upward momentum of the market, so we can expect this to continue. Interpreting this kind of technological signal positively is not just limited to Tesla. The Royal Bank of Canada asset management technology strategist is Robert Slimer. This expert also points out that the recent rebound to the highest level in the upper resistance zone is a positive technical signal and is evaluating it this way. Of course, that doesn't mean all uncertainty has disappeared. That's according to Robert Slimer. The fact that small and mid-cap stocks in the United States have not yet entered a full-fledged uptrend is a point we need to keep a close eye on. Small-cap stocks rallying usually indicates a strong economy. However, while the S&P 500 has been performing well, small-cap stocks have been lagging behind so far. Concerns about the economy persist, and this is the correct interpretation of the situation. For example, the 10-year and 30-year United States Treasury yields have both recently touched the upper end of their ranges for the past 2 years. If these yields break above their ranges and continue to rise, it could put pressure on the stock market overall, so it's important to keep an eye on this. Now, the most important thing is the latest employment data to be released this Friday in the United States. So to be more specific, June 6th at 8:30 anti-meridium, the employment report for May is scheduled to be released. The market's current job estimate is 130,000, down from April's 150,000 forecast. Exceeding 140,000 jobs will be a key benchmark. And the unemployment rate is expected to remain at 4.2% for now. That's the current expectation, but if it goes higher than 4.2%, say to 4.4% or 4.5%, the market could be shaken quite a bit. Next, we will briefly check the momentum of the Nasdaq index, which is gathering the stocks we are paying attention to. In the case of the Nasdaq, the overall index is currently receiving strong buying. Out of the 26 stocks shown, only 1 is a sell, 9 are neutral, and 16 are receiving buy recommendations. The stock price chart is strong, showing a rebound in progress. The resistance level is between 19,400 and 19,500, and that's where the focus is right now. It's this area right here. This area has acted as both support and resistance before. The previous box range makes this section a strong resistance line, as shown here. But the next part is important. Currently, both the 21-day moving average and the 61-day moving average are holding up above. The price being above this level indicates strong momentum. That's how you can interpret it. After the adjustment, you can expect a strong rebound rally. That's the right way to view it. If it breaks through the resistance lines at 19,400 and 19,500, the next target will be the previous high of 20,400. That's how you can interpret it. Now, if additional bad news comes out, or if the volatility increases, the price could drop further. 18,752 is important support and close to me because this level is near the 20-day moving average. So if 18,752 is broken downward, it means that the short-term momentum has weakened, and this can be interpreted as a bearish signal. And then the next level is 17,701. Currently, there is a 60-day moving average line here, so if the 60-day moving average is also broken, it can be interpreted as a signal that the midterm trend is weakening. Now, for the short term, the important thing is that this upward trend needs to continue. If the upward trend persists without sideways movement or decline, we will monitor to see if it can regain its positive momentum. Recently, a company announced the results of quantum computing-based tabulation, and it's directly related to Credo technology. Credo technology has been drawing attention after the recent earnings announcement. The stock price is surging, up 14.5%. So today, let's quickly check Credo's earnings results. I brought the Korean article from Seeking Alpha to introduce it to you, so please take a look. I explained how to set up this feature before, and there are a lot of people joining the membership after that. If you want to try it for just a week after hearing my explanation yesterday, you can join the Seeking Alpha Premium membership at a discounted price of 20%. So if you want to try it for just a week, I think it would be good. I will also show you CrowdStrike's earnings results. It's strong compared to Q4, but not as strong as previously. The net profit per share was recorded at $0.35, which is a significant increase compared to the expected $0.08. The growth is good. Sales reached $1.73 billion, a staggering 179.7% growth compared to the same period last year. That's almost 180%. Compared to expectations, they generated over $10 million in additional sales, showing explosive growth. And another important thing is the outlook for the second half, which was the key point. Sales were between $1.85B and $1.95B, exceeding the consensus of $1.624B. Therefore, the outlook for the next quarter also shows strong performance that far exceeds the market consensus. So, seeing prices dropping like this in the market is definitely unusual, and you might think the same when you look at it this way. Now, let me read you some additional information. Now, in the case of single sales, last year it went up as much as 180%, that's how much it increased, but even compared to the previous period, it still went up by 25.9%. Even if sales only increased by 25% compared to last year, that's still substantial growth. But when you compare the current credit technology to 3 months ago, sales have increased by a whopping 26%, a remarkable increase. Here is the total profit. We recorded 67.2%, and if you round it up, it's 67.4%. The company's net profit was $36.6 million, and its operating profit was $65.3 million. So if we subtract this net profit and compare it, we can calculate our net profit margin. 36.6 million divided by 170 million equals 21.5%. And if you calculate it roughly in your head, you get an amazing net profit margin of 38.4%. So the profit margin is getting better and the margin is going up. And we can definitely see that in this part as well. Next, it's Kyung Young-jin's turn to speak. The Chief Executive Officer of Credo is Bill Brennan, and he said that by the fiscal year 2025, Credo will achieve outstanding results. The interim report shows the company achieved a record $436.8 million financial result, a 126% increase from the previous year. Although there was a 180% growth just in this quarter, looking at the entire year, sales impressively increased by 126%. This company's performance was innovative and stable, and it contributed to the improvement of energy efficiency and high productivity, which are highly valued in the industry. The network solutions we are currently selling are being sold like hotcakes, and that's the reality. To support next-gen artificial intelligence services in the United States, demand for high-performance, scalable, and customer-oriented solutions is rising and expected to continue in the near future. We will keep improving. Please reconfirm. I left my calculator on the desk. Please keep it safe. It's Andy's. Since this was the actual result for the fourth quarter, we are comparing it to the entire previous year. Total revenue is showing a very strong upward trend compared to before. In just 1 year, it more than doubled from 192,970 to 436,775. And if you look at the next one, gross profit also increased dramatically. Last year it was 11,943, but this time it jumped to 282,909, which is more than double in just 1 year. Now let's examine the bottom of the screen. It's even more incredible. The reason is, last year it was in the minus. Originally it was a deficit business, but this year it turned into a surplus. In a single year, the company went from being in the red to generating over $52 million in net profit. Here's how such a turnaround is achievable. And the financial status is also very good. Many people have learned from American stock investment schools. Assets are mostly self-owned. Currently, the total amount of assets is $809,257. This has increased much more compared to a year ago. Cash and cash equivalents increased significantly in certain areas, as seen here. It's a cash asset, and this is a cash asset. A year ago it was 66,942, but this time it was 236. A huge surplus. It has increased by about 3 times, and you can see it like this. Breaking it down further, out of the 809,257 liabilities are only 127,675, which is a small portion. The liability ratio is very low, and the remaining 681,582 is current assets. So, even when you look at the financial statements, you can see that the fundamentals are very solid. So, not only is the actual growth remarkable, but it's also a company with very strong financial health. This is something you can clearly see in this earnings result, which is why Credo Technology is getting so much attention. Next, I prepared an article related to Meta. in the Meta stock market, there was some huge news that was revealed. Even those of you who weren't interested in Meta stock before, if you read this article, you might start thinking about Meta as a company again. Personally, I think this is some extremely positive news. Meta Platforms is reportedly working on automating advertising, and because of that, Meta is aiming to use artificial intelligence to plan, create, and target ads in a way that brands can fully utilize artificial intelligence for their advertising by next year. Now, let me briefly explain what this means. Even now, Meta's advertising platform already has this. Currently, artificial intelligence tools are already provided that can generate variations of existing ads, make simple edits, and deliver them to Facebook and Instagram users. Artificial intelligence features like these are already in active use. However, Meta is now planning to support brands so that they can create entirely new advertising concepts from scratch. This means that from the very beginning, they can create advertisements. Are these artificial intelligence-based advertisements? Meta's top executive, Chief Executive Officer Mark Zuckerberg, is at the center of the company's dramatic transformation, and I'm here with him. Advertising revenue accounts for 97% of Meta's total sales, so it's hard to imagine Meta without advertising. And with this revenue, they are investing heavily in artificial intelligence and data centers. They also bear the cost of training the most advanced artificial intelligence models. That's why I keep saying that Meta is a company that the present and the future share, and that's how they've grown so rapidly. Despite the current situation, their growth rate remains exceptional. Among big tech companies, Meta's growth rate is second only to Nvidia. They invest vast sums of money in future projects, in a manner unique to them. The current situation is very good and the future looks positive. The expected future is already promised, so we can look forward to it confidently. Despite that, the current outlook is improving further. The reason is that when you use advertising tools developed by Meta, the brand can upload its promotional product images. All you have to do is set your advertising budget and target, and the artificial intelligence will automatically generate the entire ad, including images, videos, and text. It's a scary thing. All you need is a product image and a budget. Other than that, the artificial intelligence will take care of everything, including the Meta platform. Yes, this system determines which Instagram or Facebook user to target and provides everything up to the budget limit. So, in the current advertising platform, if I am an advertiser selling products, all I have to do is upload a photo like this, and then the system tells me how much money I need to spend on the ad. That's it. Then the system automatically creates the ad for you, and it also plans everything, including which Instagram and Facebook users to target and where to place the ad. Meta is also expected to provide the ability to personalize ads in real time. What this means is that, based on each user's individual geographic location and other data, the same ad can be shown in different versions to different people. In a car ad, users will see different versions tailored to their region. Those in areas where Sport Utility Vehicle S are popular will see Sport Utility Vehicle ads, while urban users will see ads for compact cars. The same ad will be customized based on local preferences. As for the Meta, we currently don't know much about it. Therefore, by using the information they know about us, they are planning to provide personalized ads and customized advertisements. So, are there any artificial intelligence tools that recommend things like this? Industries are using artificial intelligence to create content, and even without high costs, they can now produce photos, videos, and advertisements entirely with artificial intelligence. Nowadays, advertisements can be created with a single click. This is the reality of our world. So, how effective are these types of ads? Last week, at the 14th Weekly General Meeting, Lee Joe Keobeo made an announcement. What he said was basically, we want all industries to set goals like increasing product sales or securing new customers and so on. If we just set a specific amount as a goal and only connect it to the execution account, then what we're trying to create is a world where we handle everything ourselves. It's about becoming number one in advertising, doing things this way. And also, is it possible to automatically generate ads with artificial intelligence from the very beginning like this? Especially for small and medium-sized businesses that don't have enough advertising budgets, this can be a big help, of course. But there's just one thing to keep in mind. Small and medium-sized businesses tend to focus more on Meta platform advertising than large companies. In other words, compared to large companies, small and medium-sized businesses are more likely to advertise directly on Meta platforms. That's how you can look at it. The reason for this is that the results are immediate and the effectiveness is high. Now let me summarize what Mi Ji-hoon said in one sentence. In advertising, creatives traditionally refer to images, videos, and text used for advertising. So in order to create these kinds of creatives, the advertiser themselves has to create an advertising file or material. The costs increase significantly due to that. However, if artificial intelligence automates the entire process, then, especially for small and medium-sized brands with limited budgets, they can save on production costs and time and still easily get optimized ads for Meta platforms. That's how you can look at it. And if advertisers rely solely on Meta's artificial intelligence ad automation tools, it's highly likely that their ad budgets will naturally flow into Meta's ecosystem, like Facebook, Instagram, and WhatsApp. Therefore, if you end up using only one platform, there's a risk that your advertising budget will be locked into that ecosystem without much flexibility. That means advertisers are becoming increasingly tied to Meta's platform. And another thing is that Meta has a huge amount of user data. More than 1/3 of the world's population uses Meta's platform. So if you feed this kind of data into artificial intelligence model training, you can automatically generate ads, right? Not just any ads, but ads that are automatically generated like this. These ads can be personalized and highly optimized in real time, allowing you to achieve incredible results. That's how you should look at it. Yes, that's how it works. So platforms like TikTok or Google are even more sophisticated in automating their advertising, and you can see that they are designed to maximize conversion rates and deliver better results. Now, in the case of platforms like Google, since there are both search and YouTube, they know about us in a very detailed way. It can be acknowledged that Google has unique strengths not easily matched in terms of data and meta information. Anyway, Meta is also collecting and analyzing user activity data from Instagram and Facebook and is building its own infrastructure. Therefore, ad creation and delivery algorithms are also being improved in real time, as you can see. It takes a considerable amount of time for competitors to collect, process, and accumulate vast amounts of data. Therefore, the barriers to initial entry into the advertising market remain high. Going forward, Meta and Google's dominance is expected to become even stronger, so we can make this judgment. Meta's stock momentum is also very good. Out of 26 indicators, not a single one is showing a sell signal. 9 indicators are neutral and 17 are recommending a buy. The stock price chart shows a significant recent increase, but it remains fairly valued and not overpriced. The moving averages are currently around 670 to 680. Now, the 20-day simple moving average is shown in orange here. As you can see, it's above the green line, which is the 60-day moving average. So that's why it's strong. The upward trend is strengthening. And with the stock price above these two lines, it indicates that it's currently in an upward trend. That's how to interpret it. The resistance around the previous high of 740 is significant. The price has been stuck there for some time, and whether it can break through is crucial. If it breaks above 680, it could keep rising, with the next target at 740. However, until it actually breaks through 680, there's no clear sign of a reversal yet. Momentum is getting stronger and stronger. This is how you should interpret the chart. Today's last news is about Tesla. It's related to Tesla, and an important day for Tesla is coming up soon. It's the delivery date scheduled for June 10th. Currently, there are two opposing perspectives in the market. One is, in our ordinary conversations and news, you often hear these words. So, Tesla's history also tells us that now is the time to buy, and there are also markets like this. On the other hand, some say, what are you talking about? Tesla is just getting started. The stock price increase is just beginning to accelerate, so you should buy now. These two opinions are sharply divided. So I prepared an article related to this. This article has been delivered in a podcast format so that many people can easily and positively listen to the latest heated debates. Please listen carefully, everyone. While listening to the conversation between the two hosts, if you have any opinions or feedback, please leave them in the comments section. It will be a great help. That's it for today's broadcast. To everyone who watched the Korean election with Mijun today, I sincerely want to say thank you. Let's keep fighting together until the day we all retire as stock investors in the United States. Have a happy day. Thank you.
Hello, Mijun family, everyone. Can you all hear my voice well? This is Hwan Young from Feedback. Please leave a lot of comments. Today, many of you are curious about Tesla, so we have prepared two perspectives on Tesla that are quite the opposite. These are two completely different perspectives, so it should be more interesting. Yes.
That's right. It's like a teaser for the next episode, creating anticipation. Yet it's not. It's happening in the present moment. Elon Musk has repeated this, so we need to pay close attention. That's the main point. So,
It's a completely divided opinion. So today, I'm going to take a closer look at these two perspectives and try to help you understand Tesla's current situation and future potential more objectively. Now let's get started right away. First, let's look at the Stonefox Capital analysis. Just like the Robot-Taxi launch is highly anticipated, it can also be disappointing if it doesn't meet expectations. That's why they're being cautious. Why do you think they're looking at it this way?
the key point is this has been delayed for several years. So, ahead of the launch in Austin on June 12th, there are already skeptical investors waiting in the background. Waymo is already operating about 25,000 rides and is rapidly expanding, especially in California, where it is said to be dominating the market with more than 70,000 rides per month. And
Waymo is really at that level. By the way, didn't Tesla start developing in earnest about 10 years ago in Austin? Waymo said it was just a one-year test, but isn't this taking too long? It seems like the preparation is taking longer than expected.
yes, that's why concerns could definitely arise. The test period is short, and there are also restrictions, so issues like accuracy are also pointed out. From here, what we can imagine is that Waymo is already operating robot taxis in the market, and Waymo has already built up a certain level of recognition. Tesla is following this trend, but it's not easy, and there are some things that might not be possible.
That's what people are saying. For example, with full self-driving, it could cover the weaknesses of human drivers. Or if not, the competitors might all use the same sensors. Or it could just be a matter of personal preference. At the same time, there are still a lot of concerns and thoughts like this. That's right.
Indeed, rather than confidence in the technology, the criticism often stems from feelings of anxiety or uneasiness about it. And also, in reality, the problem is that the market itself is not a market where you can easily make money just by having advanced technology. Waymo, for example, is estimated to make about $30 million a year, and China's WeRide also has annual sales of around $10 million.
It's actually less than I thought.
For self-driving technology to become profitable, it needs more time.
This analysis concludes that despite only 11% market share, the stock price already reflects excessive expectations for success. So if the actual results don't meet expectations, the stock price could drop sharply. What do you think about this? However, the market also holds diverse views on this matter. In this excerpt from Lee Byung-Rai's earnings call analysis, it is stated that market demand is currently strong. The optimism is so strong that people are saying Musk is coming back.
Is that the analysis? Musk was actively involved in Dogecoin, which people saw as a positive sign. He divided his attention between Dogecoin and political risks, but now he's focusing on Tesla. There's anticipation that Tesla's narrative will become more positive with developments like Robo-Taxi or humanoid robots. This suggests he's recovering and improving his situation.
That's right, but they also said that substantial improvement would be difficult until around the middle of 2026, didn't they? That's good news, but the actual money coming in is still a long way off. So how do they plan to bridge that gap? Yes.
That's right, they acknowledge that point. But Tesla has a lot of cash on hand, about $36 billion, so they say there's no immediate financial pressure. The key point of this analysis is that it's more about the expectations of investors than the fundamentals at the moment, and that this aspect is being seen as more important. Investors are not basing their decisions on fundamentals like sales or profits, but rather on a narrative. Even among many American stock enthusiasts, there seem to be quite a few who invest in such speculative stories.
Of course there are. But have you ever actually seen a successful case of someone getting rich from these kinds of speculative stories?
Of course, that's definitely possible. First, after the initial Robo-Taxi launch, the technical feasibility of the full self-driving system is considered the biggest risk. Especially with just cameras, how well it will respond to complex environments like after sunset is also an issue.
For example, when it rains or snows.
Yes. The mask is worn to express a certain feeling about an individual, or sometimes for social satire, or to raise awareness about dangers. In the past, there were instances where people would destroy cameras while being recorded.
There were things like that.
In the end, it was a clash with Waymo. And Tesla didn't sign a partnership with Uber, and they had their own plans to go solo. Will this unique route lead to success? That's another question. Well,
Listening to both sides like this, the difference in opinions is really huge. One side focuses on pragmatism, efficiency, and progress, while the other prioritizes idealism and aspirations. Which perspective do you believe will garner more backing going forward? Yes.
Tesla is definitely at the center of the most important discussions right now. Robo-Taxi's launch is certainly important, but as you said, there are still many technological and regulatory hurdles to overcome. The key is whether Musk's leadership, the market's expectations, and the power of this story can actually overcome the real challenges ahead. That's what matters. We must monitor the operation in Austin, gauge public response, and review the model details unveiled next month. These factors are crucial to observe. Yes.
Everyone, why is this story important today? If you invest in Tesla, or if you're just interested in the technology of the future or autonomous driving, today I will help you understand the different perspectives and complex backgrounds of the recent headlines about Elon Musk. It is very helpful to have a balanced perspective. How did you find today's discussion and analysis? As expected, seeing the world through just one perspective can be quite difficult.
Lastly, I would like to ask some questions that many young people might have thought about at least once. From short-term profitability to technological superiority, and even beyond that, can strong leadership and a more sales-oriented future vision really determine the long-term success of companies like Tesla beyond their current technological advantages? It seems like a question that only needs a simple answer. Yes.
It's a very interesting question. Thank you to everyone who participated today, including the panelists and all the audience members. Thank you very much. Next time, we'll return with a more useful analysis.